So what if I told you there's a pretty good chance you're leaving money on the table every single time you file your taxes? And, we're not talking about a few spare dollars here. We're talking about potentially thousands. In this explainer, we are going to unlock the power of tax credits. Let's just dive right in. The honest truth is, a lot of us end up overpaying our taxes. Why? Well, it's simply because we don't claim all the benefits we're actually entitled to. It's this huge, widespread issue. But the good news? It's completely fixable. And trust me, this is not a small problem we're talking about. The IRS itself reported that during a recent tax season, more than 9 million taxpayers failed to claim all sorts of benefits. That's 9 million people just missing out on their own money. That is the million-dollar question, isn't it? Well, the key is really just understanding a few core concepts and knowing where to look. And, lucky for you, that's exactly what we're going to break down right now. Okay, the absolute first stop on our map to tax savings is getting this one thing straight: the huge difference between credits and deductions. You hear these words all the time, right? Well, they are not the same thing, and one is usually way, way more valuable. So let's start with a tax deduction. Think of it like this: it shrinks the pile of your income that the government can actually tax. So for example, if you make $50,000 and you get a $1,000 deduction, you're now taxed as if you only made $49,000. It's nice, but it's kind of an indirect saving. Now let's talk about the tax credit. This is the real heavy hitter. A credit is a direct, dollar-for-dollar knockout punch to your final tax bill. So if you owe the IRS $1,500 and you have a $500 tax credit, boom, you now just owe $1,000. It comes right off the bottom line. And this analogy just makes it crystal clear. A deduction, that's like a 20% off coupon you use at a store. It lowers the price before you get to the register. But a tax credit, oh, that's like a gift card. You use it to pay the final bill directly. And that right there is why a $1,000 credit is almost always better than a $1,000 deduction. All right, so now we know that credits are super powerful. Let's get to the exciting part, looking at some of the biggest and most common credits that you might actually be able to claim yourself. First up, let's talk about your home. Making your house more energy efficient isn't just good for the planet, it can put some serious cash right back in your pocket, all thanks to some pretty awesome tax credits. And you can thank the Inflation Reduction Act for this one. It seriously beefed up the energy efficient home improvement credit. So instead of some tiny lifetime limit, you can now generally claim up to $1,200 every single year. That's a huge deal. And we're talking about common upgrades you might be thinking about anyway. Things like up to $600 for new energy-efficient windows, maybe up to $500 for new doors. And for the really big ticket items like an electric heat pump, that annual credit limit can jump all the way up to $2,000. Okay, let's shift gears from your home to, well, your education. Paying for college or job training is crazy expensive, we all know that, but the tax code offers a couple of key credits that can really help soften that blow. So the two main players here are the American Opportunity Tax Credit, we'll call it the AOTC, and the Lifetime Learning Credit, or LLC. The big difference? The AOTC is mainly for the first 4 years of college. It offers a bigger credit of up to $2,500, and, this is really important, it's partially refundable. The LLC is a bit more flexible, but it's non-refundable. And that word refundable, that is an absolute game changer. With the AOTC, up to $1,000 of that credit is refundable. What does that mean? It means even if your tax bill is zero, the government can still send you a check for up to $1,000. That's literally cash in your pocket. All right, finally, let's talk cars, specifically those really popular but, let's be honest, kind of complicated credits for buying an electric vehicle. If an EV is even remotely on your radar, you need to listen very, very closely to this next part. This isn't me saying this. This is a direct quote from one of our sources, and it creates a real sense of urgency. The federal EV tax credits, they are set to expire. The clock is officially ticking. And what's at stake here is pretty significant. Before that deadline, you can get a federal tax credit of up to $7,500 for a qualifying new EV and up to $4,000 for a used one. That is a massive discount you really don't want to miss out on. Okay, so we've covered the why these credits are great and the what credits are out there. Now for the most important part, the how. How do you actually claim these savings and make sure this money ends up in your bank account, not with the IRS?
Well, it really boils down to a pretty simple four-step process. First, you've got to identify which credits you might even qualify for. Second, check those eligibility rules carefully. Income limits and other fine print are super common. Third, and this is absolutely crucial, keep meticulous records. I'm talking receipts, invoices, everything. And finally, fourth, just make sure you file the correct IRS forms with your tax return.
So, look, the big takeaway here is this. Tax credits aren't some secret loophole or a trick. They are intentional benefits put into the law to reward you for doing things like improving your home or investing in yourself. It's your money just waiting there for you. The only question left is, are you going to go claim it?